Welcome, ladies and gentlemen. It's PDAC time 2018 in Toronto, and it's the first day, and now we are in the afternoon. We are at Skyharbour Resources, and with me here is Jordan Trimble, the CEO of the company. And of course, we want to get an update. Jordan, welcome.
Thanks for having me. Always a pleasure.
Yeah, thanks for meeting us here at your booth. Lovely booth, actually. And yeah, you are in the Uranium Report 2018 also.
That's right, yeah.
That's why we are here for. And yeah, maybe you can give us a little bit of an update. I think we have done already an interview last year, if I'm correct.
Yeah.
And so maybe what have you achieved last year? What was the major milestones for you last year?
Yeah, well, it's been a very busy 2 years for us. When we did this last year, we were right in the middle of getting a few pretty transformational deals done for the company. We were just about to start our first drill program at our flagship Moore project. So we ended up drilling just under 10,000 meters at Moore last year, a winter and a summer program. Some very high-grade results, new discoveries along the strike of that known high-grade zone that's at Moore.
Can you maybe mention some results?
Yeah,
just to give us an idea what is
one of the
high-grade
highlight
for you.
drill holes, we had a 6% over 6 meters, 6%
Nice.
U3O8.
Yeah.
And just to put that in perspective, when you look at it on a per ton basis, value per ton of rock, 6% is pretty spectacular, but 1% U3O8 is equivalent to about 20 grams per ton of gold. Right, so it's very high grade. Now within that 6% over 6 meters, we actually had up to 21% U3O8 over 1.5 meters. So very, very high grade mineralization, very valuable rock. It's shallow. It's on, again, like I said, our flagship Moore project. It's on this 4-kilometer long corridor, and that's really the main focus for us, is drilling out this corridor, not just along strike, but at depth as well. We know stories like NextGen, Fission, Denison's recent discovery at the Griffin deposit. These are all basement hosted, meaning it's rock underneath what's called the unconformity. Our project, Moore, it's had a lot of historical drilling. There's been many tens of millions of dollars invested historically into the project, but not a lot of exploration or drilling into the basement rock. So it's very exciting for us now going back there after having acquired the project just over a year ago, year and a half ago, and really giving it a new look. One of the things we just did in January, and we'll be drill testing some of these new targets, we flew a drone mag survey. So very
drone? That's interesting.
Exactly.
No helicopter. It's much cheaper.
No helicopter. No helicopter. No aircraft. But what it allows you to do, two things: much tighter spacing, so you get much more refined signature geophysical data, which is very important for high-grade uranium deposits. That's one of your main layers of data you use to target your drilling. But also you get to fly the drone lower to the tree line, right? Not a lot of pilots want to fly right above the trees, so you get better penetration. Again, it just gives you, in theory, much more refined data. So we've just finished that. We now have just announced in the last week we've started a minimum of 4,000 meters of drilling. Some of that drilling will be focused on these new targets. So that could really be the key to unlocking additional discoveries, high-grade discoveries at this high-grade flagship project of ours. And we'll have drill results out over the next few months. So that's the most recent at our flagship. But as you're well aware, we have a handful of other projects. Unique to Skyharbour, we do employ the prospect generator model in conjunction with our high-grade discovery potential at Moore. We employ the prospect generator model at other projects, bring in strategic partners. It was around this time last year we finalized the deal with Areva out of France, now Uranium, $8 million deal, so they'll be funding the bulk of the exploration at our Preston project, which is over by Fission and NextGen. They have a $2 million program underway currently, 4,500 meters of drilling, so we'll get some news flow from that as well. So it's actually, over the next few months, going to be our busiest exploration season ever. Just under, call it, about 9,000 to 10,000 meters of drilling combined between Moore, our project, and Areva at Preston. We also have another partner company called Azincourt. They're carrying out some geophysical work as well. So they're partners. They're earning in on another property we have called East Preston. Actually, those two deals, one with Areva now, again, Urano, and Azincourt, it's a combined expenditure over the next 6 years of about $9.8 million in exploration. There's also some cash and stock payments as well. That would get, these companies can earn up to 70%. We retain a minority minority interest. So it's a perfect example of us executing on that prospect generator strategy and model. And it really allows us to advance these other projects while we can focus all of our time, money, and effort at our flagship and more. Exactly, yeah.
Sharing costs, bringing the risk down.
Exactly.
Finally. Super. So what is, let's say, key 2018? What do you think makes the company even more sexy?
Yes, yeah. Well, drill results is the key catalyst, right? You know, as we know in the Athabasca Basin, you know, one drill hole can make a big difference. Again, you look at the successes that NextGen's had, that Fission's had, that Hathor had, and before they were bought up by Rio Tinto. These are all high-grade discovery stories, and a lot. You look at NextGen and Fission. This is while the commodity price has been moving in the wrong direction. These companies have gone from $30–40 million valuations to hundreds of million dollars in market cap, while the underlying commodities actually moved down, right?
All the way south.
You can imagine if you get the opposite of that happening, you have some drill success, exploration success going into a recovering uranium market. That's very exciting for shareholders of the company. So the drill results from our flagship project, we're carrying out this winter program that we just started. You'll see results coming out on that. As I mentioned, Areva also carrying out a drill program right now. Azincourt carrying out some work. So 3 exploration programs underway currently at our project base, 2 of which funded by partner companies. Lots of news flow from that. The other big thing is going to be the market, the uranium market, right? We've had some, well, in the last few months, major supply cuts, right? You had Cameco announce they were shutting down and now have shut down McArthur River, the largest uranium mine in the world. These are mines at the low end of the cost curve, right? These are not the higher cost marginal producers. So as contracts, higher price contracts roll off, you're likely going to see more supply cuts, production curtailment, which will help move the uranium price higher as well. But you had McArthur shut down. That's about 10% of global primary mine supply offline now. And then you had Kazatomprom out of Kazakhstan announce a 20% cut over the next 3 years. So major
is
cuts.
That then for the market?
Yeah, so that works out on a per year basis about 7 to 8% per year over the next 3 years. That was on top of the 10% that they announced last year. This time, call it last year. So here are the 2 largest producers and the lowest cost mines in the world that are being either shut down or the production curtailed, and that's going to obviously be bullish for the price going forward. What we really need to see happen are the utilities companies, the purchasing managers, the fuel buyers coming back to the market and stepping into the market. And I think with these supply cuts, they're going to be incentivized to do that sooner than later.
Under pressure, aren't they?
Very much so. And we know there's a lot of uncovered requirements. There's a lot of contracts that expire over the next few years. So we know they have to come back. And I think we'll start to see that here in 2018. That'll help drive the price higher. Demand's growing steadily, right? You look at 2016, more nuclear.
The Chinese are building, the Arabs are building, everybody's building, right?
Everyone. You know, and a lot of that focused in the developing world. But you look at the Chinese, right? In 2016, more nuclear electricity generation came on the grid than any year in the last 25 years. Half of that was in China. The 10 reactors that came on the grid, 5 of them were in China. We see 57 reactors currently under construction, hundreds more in the pipeline that are planned or proposed. The Middle East.
Demand is there.
Demand is growing, right? Demand is growing, especially in the developing world. It's the supply side that's going to be the question mark going forward. We've had an oversupplied market, hence the price, what's happened with the spot price and the market there. But now with these major production cuts, right, and really no new meaningful mines coming online in the next 5 or 6 years, you simply don't have the price to incentivize new builds. In fact, the price right now at $22 a pound, there's only one mine, the lowest cost producing mine in Kazakhstan, that's even break even, right? So there's really
the rest is losing money.
The rest is losing money. The only reason they're still making money is these contracts, but as we know, these contracts roll off. So again, like I said, I think you're going to start to see additional supply cuts over the coming years. That'll be positive. You have new demand coming online. You have the existing reactor fleet globally that, you know, these reactors last for many decades. So we need the uranium. Where's it going to come from? If you look at globally right now, right, where you're mining, where you're exploring for uranium, there's only a couple places you want to be in. The Athabasca Basin in northern Saskatchewan, one of the best places in the world for mining, but it's also the highest grade depository in the world as well.
But even there, I mean, even if, you mentioned Fission, NextGen, etc., they are, what, 5 to 10 years away from production? So from where does it come?
Look, these mines you don't just turn the mine on overnight.
Exactly.
Permitting, raising the capital to the development costs, right? It's not easy to get these mines online that quickly. So you're absolutely right. That's going to exacerbate this, I think, impending supply deficit. Well, we're already seeing this year, in the first year in many years, where we actually do have, we're expecting a supply deficit, but that's just going to be exacerbated by the fact that you have new demand coming online. You do not have any new meaningful production coming online in the next few years, and in all likelihood, you'll see, I think, additional supply cuts as well. So these are all good tailwinds for the uranium space going forward, and I think we're going to see a higher price.
Perfect, super. That was a great final sentence, I would say. Jordan, thank you very much on that. And you are bullish on uranium as I am. And so I would say keep it going, and we look forward to a lot of the results.
Absolutely.
As you said, busiest time of the year.
Yeah, busiest season, and we're hard at work looking at. We're always looking at other projects as well. I mean, there's an opportunity to acquire projects at attractive valuations, but we also have interest from a few other companies on optioning or joint venturing out some of these other projects that we have as well. So lots of news flow, lots of high-grade discovery potential, and strategic partners. Areva, as I mentioned, Denison Mines is our largest shareholder. They own about 10%, and the gentleman who runs Denison, Dave Cates, is on my board, so very close working relationship with them. We have a good team, right? It's a team that we've built up over the last few years that has focused expertise. Rick Kazmersky, our head geologist, was the exploration manager at Cameco for many years. Paul Matizik's the strategic advisor, well-known name in the industry. So a very strong team, management, technical team running it, all the right ingredients for success.
Perfect. Thank you very much.
Thank you.
All the best.
Thank you.
Yeah, ladies and gentlemen, it was Jordan Trimble, the CEO for Skyharbour Resources. And you heard it, everything is in place. The drills are turning. A lot of news flow is coming up. And as Jordan pointed out, they are super active this year in the company. Uranium markets really should turn this year also, because there is a big supply deficit. It's not only upcoming, it is reality already. And this should help to drive the price finally north and not more south for uranium. And of course, it helps companies like Skyharbour. So, thanks for watching us. Bye-bye from Toronto.